Hi, welcome to Channel Trading. Someone left me a message the other day that the first candle that opened after the New York Open was a very positive one, but the prior price action showed that it was going down, and it was very stressful for them to enter long because they knew it was going down, but they weren't sure. So I want to make sure our entire premise or strategy is that if you get a positive candle, the first 2-minute candle, you enter 2 cents or 2 ticks above this opening candle, right? And go long. If it didn't hit, it didn't hit. If it hit it and you put your stop loss underneath this channel, it came down and hit that, fine, you're out of it. Okay. So that the only way the stress would have happened is because you're unsure about the strategy itself. You were kind of thinking, maybe it will work, maybe it won't work. I'm not too sure. That's when that happens. And the only way to curb something like that is to backtest it, to look at 15, 20, 30, 40 charts, go back, just arbitrarily open someday, put these channels, look at it, see what happens. I can guarantee over 80% of the time it works. That itself should give you some confidence to stick to the strategy. Okay. The same is applicable to any strategy. So one thing is, I can sit here and keep going over the strategy any number of times and it doesn't matter. For you, when you are alone in your trading journey, the only way you're going to succeed is to really sit there, go back test and feel confident about what you're doing. And the only way you're going to feel confident is to really look at the charts, put it all together, and put the strategy to test for all the previous charts. Whenever it is, whatever it is, go back 10 days, 15 days, 20 days, keep arbitrarily open charts, put the channels, and see what exactly is happening. What would you do in the situation? And you would know it works remarkably well. The only two or three things that you really need to understand is where to put these channels, right? Which I have gone in quite a few of these videos. And the second thing is to really understand the candlesticks, what kind of candlesticks are bearish and bullish. And number three is how to combine multiple candles and just stick to the strategy of entering or going long or short, 2 ticks above for long. For short, or for long, 2 ticks above to enter, and then put your stop underneath your trigger candle. Typically, it's below the channel, and then go for it. Okay, if you're applying any other strategy to it, such as support resistance lines, it's even better because, for example, you're in this situation where there is a pivot here and then another pivot here. Pivot is basically, I'm not talking about pivot points. Basically, the price action turned. It turned here, it turned there. You kind of know this is your support, right? When you have a support there, you can put it underneath that. If this triggered, and put it underneath that for your stop instead of right there, because it's it looks middle of nowhere. Okay, something like that. But other than that, I would, just to summarize, stick with the strategy. And the only way to feel confident that you're going to stick to the strategy is to backtest, whether it is my strategy that I'm talking about, channels, or any other strategy. The only way is to test it 20, 30, 40 times, test it in real time as the market is reacting, and feeling confident about it. Okay. Hope that helps.